Bitcoin, the world's first and most famous cryptocurrency, has been a beacon of innovation in the financial world for over a decade. But today, it faces mounting challenges that could signal its decline, at least in the foreseeable future. Let's dive into 3 significant and concrete reasons why Bitcoin might have already reached its peak and explore the implications of these challenges. First, rising energy costs are hitting Bitcoin mining hard, threatening the backbone of its operation, the proof-of-work mechanism. Mining Bitcoin involves solving highly complex mathematical problems, a process that requires immense computational power and consumes vast amounts of electricity. With global energy prices surging due to geopolitical tensions such as the ongoing energy crisis in Europe sparked by the Russia-Ukraine conflict, and increased demand for electricity worldwide, the cost of running mining operations has skyrocketed. For instance, in 2021, it was estimated that Bitcoin mining consumed more electricity annually than entire countries like Argentina or Norway. Fast forward to today, and the situation is even more dire. Miners in regions like Kazakhstan and Texas, 2 major Bitcoin mining hubs, are struggling to remain profitable. In Kazakhstan, energy shortages have forced authorities to shut down mining farms temporarily. In Texas, heat waves and rising electricity rates have led to mining operations halting during peak demand periods. To make matters worse, Bitcoin's halving cycles reduce the reward for mining by half, approximately every 4 years. The next halving is expected in 2024, and when it happens, the financial incentives for miners will shrink further, making it even harder to offset rising costs. This dynamic could force more small and medium-sized miners out of the market, leaving Bitcoin mining in the hands of a few massive players, contradicting Bitcoin's original vision of decentralization and increasing concerns about its sustainability. Second, the rapid rise of quantum computing poses an existential threat to Bitcoin's security. Quantum computers, unlike traditional computers, are capable of performing calculations at unimaginable speeds. Recent breakthroughs, such as Google's demonstration of quantum supremacy, highlight just how close we are to a future where quantum computers could break the cryptographic algorithms Bitcoin relies on. Bitcoin uses SHA-256 for mining and ECDSA elliptic curve digital signature algorithm to secure transactions and wallets. While these algorithms are virtually unbreakable by today's computing standards, a sufficiently powerful quantum computer could theoretically crack them in minutes or hours. What does this mean for Bitcoin? If the encryption protecting Bitcoin's blockchain or wallets is compromised, attackers could forge transactions, drain wallets, and undermine the very trust that Bitcoin relies on. Even if quantum-resistant solutions are developed, rolling out such upgrades across Bitcoin's decentralized network would be a monumental task, requiring global coordination and adoption, a process that could take years. In the meantime, fear of such vulnerabilities could severely damage Bitcoin's reputation and value. Finally, Bitcoin's adoption has stalled, and its ecosystem is increasingly driven by speculation rather than real-world use. While Bitcoin was initially envisioned as a decentralized currency to revolutionize payments, it has failed to gain significant traction for everyday transactions. In fact, studies show that less than 1% of global Bitcoin transactions are for payments, with the vast majority occurring on trading platforms. Consider this. Major retailers like Microsoft, Overstock, and a few others do accept Bitcoin, but usage remains negligible due to its high volatility, slow transaction times, and high fees during network congestion. For example, during peak periods, Bitcoin transaction fees have soared to over $60 per transaction, making it impractical for buying everyday goods or services. This is why newer cryptocurrencies such as Ethereum, Solana, and even stablecoins like USDT and USDC are taking the lead in payment systems and decentralized finance, DeFi. Moreover, Bitcoin's adoption among institutions has slowed. While companies like Tesla briefly flirted with Bitcoin as a payment option, they quickly reversed course due to environmental concerns and volatility. Governments, too, are focusing their attention on central bank digital currencies, CBDCs, which could further limit Bitcoin's role in the global financial system. This lack of growing utility leads to a troubling narrative. Bitcoin's value increasingly depends on speculative trading rather than real-world adoption, If most participants are simply holding Bitcoin in hopes of selling it at a higher price, the ecosystem starts to resemble a pyramid scheme, where new investors are needed to sustain the system. Without a significant increase in practical usage or adoption, Bitcoin risks losing its relevance and trust among the broader public. So, where does this leave us? Bitcoin has undoubtedly changed the financial landscape and has inspired countless innovations, but its challenges are significant and concrete. From unsustainable energy costs to quantum computing threats and stagnant adoption, the path forward is fraught with uncertainty. Bitcoin's future depends on whether these challenges can be addressed effectively, or whether they will push the world's first cryptocurrency into decline. What do you think? Are these challenges insurmountable, or can Bitcoin evolve and thrive once again? Let us know your thoughts in the comments below, and don't forget to like, share, and subscribe for more deep dives into the world of cryptocurrency. Thank you so much for watching. See you in the next video.